So hi guys, welcome back to another technical breakdown. So today is on Friday. I'm sure you'll receive this as Friday is coming to an end. So what I'm going to do in today's technical breakdown is I'm going to do a recap of some of the moves that we've had for the week, where markets are trading, and what I think is likely to happen moving forward into next week, depending on the closes that we'll see this week. On Monday, again, I'll be here to share with you my new perspective, because as markets keep moving, as more information comes into the market, then it becomes easier for us to make decisions on where the market is ultimately likely to move. So starting off, if I just look at the fundamentals that we have had for this week, inflation in the US keeps on rising. This week we had another record high, higher than the previous 40 years again. It came out at 9.1. So the trend for inflation is still going higher, and I think the trend for interest rates is still to go higher. And if you look at markets, I think most markets have priced in a very, very aggressive rate hikes. If you look at, let's say, the dollar is now trading at 108.5. Where do I think it will ultimately get to? Probably 110, 120. If you look at yields have topped at about 3.0, but I think we are likely to see yields at 3.5, 4, especially the 10-year yields, because rates are still likely to go higher for us to tackle the problem of inflation. The risk with the risk with rates going higher, obviously, is we are going into a recession. And if we have a recession and we have inflation, then likely we're going into a period where there'll be stagflation. That's a period whereby there's stagnant growth and inflation is still moving higher. That's a very, very dangerous thing. If you want to understand how it's tackled, which asset prices to be holding, which markets do well during such periods, I think those are some of the things you should really spend your time trying to understand right now. Because over the next few, let's say months, over the next few months, let's say 6 to 12 months, we'll clearly know if you're going into a recession or a stagflation and how markets will react. And I think the macro theme for that will be different asset prices will develop, different trends will develop when that risk materializes. Or actually, some of those trends have already developed. For example, last year in November, we started hearing taper tantrums from the Fed. And in January, markets stopped, and for the whole of this year, at least for the first 7 months, markets have been sliding lower, shedding off some gains for the previous 2 years, 2020, 2021. And I think we are still likely to see some moves lower. Maybe some pullbacks will come in, but I think the general trend is still to the downside. There isn't much that is likely to change the general trend of this market. So I'm going to look at the markets that I normally trade. I'm going to pay attention to 5 markets that I normally trade. I'll also look at cryptos. I think there's some good moves there, some good opportunities there also over the coming months, and I'll try and shed some light on what I think will happen in those markets. Again, don't take this as investment advice. This is just us sharing our opinions and what we think will happen in the markets, and in the blink of an eye, I could change my opinion and be in a totally different state. So ensure as you're trading, you don't use this as your advice, or you don't follow it blindly. Make sure you have your own outlook and your own framework, your own risk levels, and how you manage your risk. So starting off, I'll look at gold. So this is gold. If you can see my chart, which I hope you can, if I just go to the daily chart, you'll see that this is gold. Let me just actually start my analysis from the weekly chart. So I won't start it from the daily chart. I'll start it not actually from the weekly. Let me just start from the monthly chart. So if you go to the gold chart on the monthly chart, what you discover is that from 2018, October 2018, August, September, October, I remember some of these moves particularly well because I was trading some of these markets at this time aggressively. And I remember in 2018, August, that was the start of the trade war, and gold finally took out 1375, 1350 level, which was a major psychological level, and rallied from 2018 all the way to 2020 and topped at about 2000. We then had a collapse, again a correction all the way to about April of 2021. Then we had another move when inflation started becoming a problem and Russia invaded Ukraine. Again, market stopped at 2000 and then started seeing a move to the downside. Basically, if you just look at this pattern, it's a basic, simple pattern. What is it? Basic double top formation with the likelihood of us going back lower to about 1500. So I think gold could ultimately visit 1500, 1400 in the extreme cases. That's my long-term perspective. If rates keep going high, obviously, gold will have to sell off a bit. It will have to shed off some gains. And I think us visiting 1500, which is about 2000 pips from where we currently are, is not really a very, very strong move, or a move that is not likely to happen. In fact, the question is when will it happen, not if it will happen, because I think there's a very, very high chance markets will ultimately visit 1500 at least. That's where we will start thinking of maybe pivoting to longs or observing what will happen in markets. Maybe we're going to a consolidation again for some years. We don't know what will happen, but for now, at least we can see that the general trend is to the downside, and markets have been selling off quite aggressively. If I go to the weekly chart, it's quite simple. So you can see clearly markets have dropped again at 2000. We've seen a channel formation taking us to the 2000 level, rejected the 2000 level, we started moving lower, took out 1800, moved lower again to 1700. And I think there's a high chance we will break 1700 and at least tap into 1600, 1650 before any major correction. The last 3 weeks, very good bearish momentum. 1700 is also a major psychological level. So I wouldn't be amazed or surprised, especially if you go back to the daily chart. There's a very, very strong case for markets at least having a temporary pullback from this level, 1700. So we've come back all the way from 1850 to 1700. I don't see why we wouldn't see a pullback maybe to 1750, 1775 if 1700 holds. If 1700 is taken out, 1650 is our next level. You can see I've marked it well. And if 1650 is taken out, then I'll be looking for 1600. But I think 1700 is a very major level. If I just go to the 4-hour chart, for example, you'll see that markets have bounced off the 1700. We started seeing some bullish momentum. We came back again, and it looks like we will really struggle to go below this level. I'm very keen on today's close to see if we close below 1700, but I don't expect really a good close below 1700. In fact, what I expect is the market to start coming back, probably going into next week. We'll see a pullback to 1750 or another major level, but let's just be patient. But the general trend is to the downside, and I particularly like to trade in the direction of the trend. So as much as I'm anticipating some of these pullbacks, I don't really take part in them. I've learned over the years to try as much as possible to identify the direction of the trend and to trade in the direction of the trend, not opposite to what the trend is doing. So I won't be buying some of these markets, but I think there's a potential for some pullbacks. Next, I look at crude oil. I think here there's a very good opportunity. Actually, in all markets that I trade, I think crude oil poses the best opportunity for me right now, because I think oil has just started to move lower. Other markets have descended quite significantly, but the oil market has not shed off most of the gains that were accumulated for the last 2 years when it came back all the way from zero to traders highs on $20 a barrel. As we are heading into a recession, I think oil prices have to price that in. I think we are likely to see oil prices coming back to $80 a barrel, $70 a barrel, most likely. Very easily we could see prices going to that level. Now, what do I think will happen if we just go to the weekly chart? What are some of the patterns that I'm observing? Not the weekly instead, but the daily. So on the daily chart, you can see after this move to 120, the general trend has changed. Momentum has started pointing to the downside rather than to the upside. How do I know that? Typically, we've gotten 10% collapses, 5-6% collapses to the downside, and we've just gotten 3 or 4% moves to the upside. That tells you that momentum is shifting. Initially, it was very big moves to the upside, very small moves to the downside. Now it looks like the narrative has changed and that it's very big moves to the upside and very small moves. Very big small moves to the upside and very big moves to the downside. Currently, you can see we've gotten a strong pin at $95 a barrel. We could see a correction back to $100 a barrel. I wouldn't be surprised by that at all. If I go back to the 4-hour chart, you can see I'm very keen on that level. I'm watching particularly to see if markets will go back below $95 a barrel, but I think there's a high chance we could rally all the way back to $100 a barrel before the next downside target. But long term, I'm still looking for a move to the downside. I think these markets are likely to stay below $100 a barrel. Probably we could even see a break of 95 and a collapse to $85 a barrel if we take out $90 a barrel. So you can see clearly I'm paying attention to specific levels and markets are really respecting some of those levels that I'm watching. So I'm very keen to see if we'll get that move. But the general trend for me is to the downside. It's just a question of finding the right entry points and exit points in the direction of the trend. And right now we're just looking for the next place to sell. It could be 97.5 after that trend line bounce. It could be $100 a barrel. And this trade most likely is for next week. I don't really expect it to play out today, but it could also happen. We've seen cases where on Friday markets have gone down significant percentages. Although today is at least London has opened and we've not seen any significant momentum. So I don't expect things to change that much. I think the general trend will still remain the same. If I look at the Dow, so the Dow, these are 30 of the best American companies. Most likely these are value stocks, not growth stocks. So they tend to be defensive stocks rather than growth stocks like the Nasdaq. And you'll find people turning to them when things are not going so well, because the companies which are here, the likes of Microsoft, the likes of Apple, the likes of IBM, those big companies which are not really affected by recessions because they have huge cash flows, free cash flow. They're quite stable. So you'll find that people will like holding them even during periods of recession. And you can see, unlike the Nasdaq, which has lost about 30%, I think the Dow has lost less than 20%, 18, 19%. I'm not really sure. You can calculate the percentages and check them out. However, I'm still expecting this market to go down, to move lower. I think we've rejected 31,000, started moving lower. You can see the pattern, quite basic. Just waiting for this move to 29,000. I think the Dow could sell off to 27,500. That's the level that I'm looking for on this market. Once you start approaching those levels, maybe we will start seeing a turn or a change in the general direction, at least of this market, or a major pullback. But for now, I'm still bearish. I still expect this market to keep moving lower. I've not seen any good case for the trend reversing from moving lower to higher. But you can expect some strong pullbacks when this market is moving lower. Why? Because most people who are trading these markets buy these markets when they're cheap and they don't time markets. So you'll find, unlike us who are interested in a 500, 600 point move, the billionaires are just interested in buying at a cheap price and holding for the next 2 or 3 years. So for them, it's 30,000 at cheap price relative to where markets are coming from, probably, and they could start buying. So you could see some major moves to the upside, but I think risks are still elevated. So I still think this market could shed off some gains to 28,000, 29,500, which is the next downside target. So that's my outlook on the Dow. And if I just look at the next pairs that I'll be looking at is GBP USD. The dollar has been creating new highs in the pound, and Euro USD has been moving lower significantly. We finally took out the 1.2 level. You can see this is the first week where markets have closed below 1.2 if we get such a solid close. So if we get this close, I think markets ultimately will visit 1.15. That's the next level that I'm watching. If I just go to the daily chart, it's a basic pattern again. You can see as 3 calls for this market to come back to 1.5. Do I think this market will hit that level? Probably, very high chance. And in the 4-hour chart, there were 2 trades here. So last week we had this trade, and this week we had this trade. You can see markets have almost gotten to our targets, 1.175. If they take out 1.175, we'll be looking for 1.1625, which is the next quarter level. And after 1.1625, we will be looking for 1.15, which is the next downside target. So be very keen on markets. Pay attention to what is happening. Remember, the trend is to the downside. At least until the inflation problem is over and rates stop moving higher, I think these markets will just keep moving lower. And I think 1.15 is not so far away. It's not a far-fetched target for the downtrend. Next, I look at the yen. So the yen had been in its own world for quite some time, for about 1 or 2 months, but it looks like it's had some soft landing, and it looks like it's shedding off some gains right now. So if you look at a pair like Euro yen, for example, we had this huge move from about $125 in March, and we went all the way to about 145. That was such a strong move, all the way to about 145 in just a quarter between March and June. And then it topped at 143, 144, and it started sliding lower. I think there's a high chance it'll retest 140 and keep moving lower to 135, probably 130 is where I'm looking for this market to come back to. I think there's a high chance it'll visit those levels. In the 4-hour chart currently, I have this position. This is one of my favorite trades, at least going into next week, because I don't think this trade will play out this week. So this is again a basic pattern that I normally look at, and I'm expecting these markets to come back to 135.875, 136.25, which is the next downside target. So that's my outlook on Euro Yen, and I think that's where I'm going to stop on these currencies. On Monday, I'll do for you a good presentation on what is likely to happen on the dollar. For now, I've not checked it that much. Next, I'll come to cryptos. I think I've been asked by a couple of people what is happening in cryptos, what's going on, what's likely to happen. And I think just like many other markets which are risk off, risk on, this is a risk on market. Normally behaves well during aggressive risk taking, during animal instincts, when fear dominates the markets. These are some of the markets which are hit hard. And do I think Bitcoin still has some downside? Yes, I think Bitcoin will ultimately trade as low as 10,000. I don't think there's any surprise that will come to me if these markets go back that lower. If you just examine the basic pattern that has been here, ever since we topped at about 65,000, which was sometime last year or this year. Yeah, it was sometime in November last year, because I remember that's when we started selling ours. You can see it started moving lower, and it's been moving lower ever since. We've just been trading in these beautiful flag formations, and then we drop again, another beautiful flag, and then we drop. So what do I expect? Probably we'll stay below 25,000, so we could come back to retest 23, 24. Don't be fooled by such moves to think that Bitcoin has turned. I think Bitcoin, I think for most trends to reverse, one thing you have to understand is you need a fundamental inflection point. We need to see a change in the fundamental picture for trends to start changing. It's very hard for a trend to self-correct without a catalyst. That's one thing that I've learned trading markets now for around 6 years. It's almost impossible, in fact, for these markets to just change the trend just because people think the trend will change. That's not how markets work. Markets need some fundamental catalyst. And for now, I don't see that catalyst to change this trend. So what do I expect? I think markets will visit 15,000, 10,000 in the extreme cases. Those will be very good prices to buy. 20,000 is also a very good price to buy. But buying with a 3 to 5 year horizon, if you're buying with a 6 months horizon, please stop buying, because these things won't come back in 6 months. Don't expect Bitcoin to be back at 60,000 in December. That won't happen, at least. The probabilities of that happening are quite low. But 3-4 years down the line, you could see Bitcoin above those levels, because again, who knows what is likely to happen moving forward. So I think we could see 15,000 to the downside and 10,000, and that's the general trend for most markets that I'm watching. This is Ripple. You can see clearly it's been selling off for quite some time. I'm still looking for this market to come back maybe to 20, 15. That will be a very good buy. The last time I made some good money on this one, and I bought it around the same prices. So I think this one is actually ripe for buying currently, with a long-term horizon again. This is Ethereum. We're back at 1,000. So you can see for some of them I've actually written some things on my charts. This one is a good buy with target sitting at 8,000. These are great long-term trade setups. So yeah, you can see like right here, I was thinking of starting to buy at 1,000, but I think we'll see half of that again, probably 500, 600, 400, in the extreme cases, even 300. Who knows, man? Some of these things go to the extreme cases. Most times markets will visit extreme cases, and I don't think these markets are just like they go higher and surprise many people when they make some magical moves to the upside. That's the same way they'll surprise you when they make magical moves to the downside. So you really need to study history and understand what goes on in some of these markets. So on Solana, you can see I'm looking for a buy at about 20, 25, 30. That's where we're currently trading 38. I think we could go down as low as 15, 10, and then we could start seeing some buying coming in. And you can see I'm looking for $200, at least a 10x play from where currently markets are. So that's my outlook on different markets. I've shared with you some of the things that I have on the crypto side of things, where we invest long term, and on the other side of the currencies, where we take short-term trades and short-term moves, but we also try and examine macro moves, which are macro themes which are moving these markets up and down. We study them and then we try to stay with the direction of the trend. So that's it. I think I'll stop there for today. I'll catch you guys in the next one, which will be on Monday, and I hope you've learned a thing or two and prepare for your trading week well moving forward into next week. So that's it. See you. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.